Hey, what's up? What's up? So this is DXY, right? 103.966. 103.966. Coordinates 103.966. The next would be 103.600. 600, and the 50% of this was the post. Sheldon, how are you, brother? This was I updated on the community post probably about how many days ago, about 4 days ago. I told I do not want to look for swing shorts on the dollar as long as the dollar is above this point, and if the price moves to this point, this would be an area of interest. So this is, here we are now. Even on the higher time frame, this whole majority of the area would prove to be the area of interest in the hindsight in future. This is foresight for now. So this is, here we are. And so if you want to take something from this stream, you can take this, take the record of this coordinates. This was updated like 4 days ago. So as I am not shorting this dollar, you can what can I expect on the NASDAQ? What can I expect? Plus no shorts, no longs on the NASDAQ for now. What is going to make or break the uptrend? What is going to make or break the uptrend? That's the $1,000,000 question, which I'm going to answer now. That would be this whole area. For add the power of 3. We go to an hourly time frame. As we go to the hourly time frame, this is where the previous months closed, right? You remember this point. On 31st January, it closed and it opened somewhere around at this point. And if we just take a statistical approach from high to low, and the 50% of the, this is what I'm considering right now, would be the whole month's range from 1st to 20th February. The whole month's range. And where we are in terms of that whole month's range, we have 25%, we have 75%, do we have 50%? Nope. So that would be our 50%. This is not precise, but this is how I'm just generally navigating within the market. So just keep an account of this point. I'm just going to remove it now. So these were the areas of interest. If you move up a higher time frame, you will see these are getting respected. So we go to, so the main question is, what's gonna happen now? Okay, and what options do I have? What can I do? If I cannot do something, What can I do? So we go to this previous month's close. Do we have the previous week's close? Nope. Now we have the previous week's close. The NVOG. Okay. So this would be the NVOG. Now tell me where are the landmines and what can I do within now and what is going to break or make the uptrend. For now, I'm not allowed to go long as the price stays below this point. I was not able to stream earlier, but this was a very extremely good setup. I shorted it something like, but it's no point just telling you right now. So anyways, this is a reference point for now. The reference point would be from 17580 to 17642. 17580 80 80 80 80. This is not a single thing. These are generally a lot of confluences within this area. So I'm including all of that in this box and considering it as one. So this is an area of interest. This is you can say the backbone of the smaller time frame up downtrend. So as long as the price stays below this point, this is getting a big box, but still a reference point is a reference point. 16744 to be precise. 16744. 4 and 4. 4 and 4. So the use of reference points and the areas of interest. So for example, if the price is below this point, I'm looking at this area. Okay, this is going to make or break the uptrend. The reference point and the areas of interest are relatively the same thing, but it has its own use as you use these terms. Okay, as long as the price stays below this point, I'm not allowed to. I'm like literally physically not allowed to like go long. So these are the conditions. So if the price comes to this point, that would give me an extremely good risk to reward ratio in terms of shorts. But as we talk in terms of probability, so it's like we are getting a good risk to reward. And if the price breaks and stays above this point, then the whole trend would break down. Then the whole downtrend would break down and we would continue upwards. So this is a general narrative of which I am playing in my mind. The next, we look at the QQQs. The Qs. Hourly time frame. Do we have an opening range gap which is not filled? Yep. Yep. Careful, this hasn't delivered to the downside. It might come back up. So just we have 46 minutes till this hourly candle close. This hasn't delivered to the upside. Hourly. This is the lower part of this opening range gap is unfilled. So as I am not allowed to go short, what can I do? Obviously, there is something obviously happening in the market. So what can I do if I'm not allowed to go long? Honestly, I was looking for it to I was hoping, in a sense, not statistically, just was my personal hope that it should not move below this point. And it has, so I'm not allowed to go long. I was trying to buy it earlier. Above that above the area of interest, that point, right? So I'm gonna show you what I'm talking about. Mm-mm. I'm gonna get to very specific point. Just give me a time. I'm gonna come to 1 minute time frame. Okay. So go to, let's go to the 1 minute time frame. Okay. You remember there's a level in my book which is called the market, right? Do any of you remember that level, which proves me to be the bottom? So that level is here somewhere, right? So that level is somewhere around at this point. This level is this is not specific, but on a higher time frame. So generally speaking, this is it's somewhere around here in this box. So as the market opened, it moved like up. I was hoping it was this might have been the bottom, but it didn't. So the whole trend is changing. If we give a closing below this level for 2 days, the whole uptrend is going to fucking break. So then we will move to this point. But personally, I don't want it. Even if it's happening, it's not really digestible. I don't want the price to, you know, go back into the downtrend or stay in a range. So let's get to the 1 minute, 1 minute, 1 minute, 1 minute, and get specific. Okay, the juice, the real juice, juice. 17525, 17525. These are the stairs. 17525, 17525. 0.6. One 7.525.6. The next would be 17547. So this is what the mini trend is going on. The first opportunity to go short was below this level. Took some of it, and the next was this point, and it's still relevant, really relevant. So if the price wants to continue down, it should stay below this point and continue to this that opening range gap, unfilled opening range gap. But you remember, if we still relatively close to this point is the backbone of the uptrend. We are 100 points below this point. If we move up and above this point, oh my god, I am not looking for shorts then. But for it to move up, it needs to tackle this point exactly, and that point. So it's an interesting area. Any trade upcoming or not? Preto was saying the trade is totally dependent on risk to reward ratio. As I'm reading the tape, I'm constantly reading the tape. If somehow gives me a good risk to reward ratio, I'll take it regardless if I'm comfortable with the trade or not. For example, if when the price was at this point now, right at the market opened, I was like, fucking go long, but it stopped me out. It was moving down, like okay, it might move to that opening range gap which is unfilled. So I took a shot, like this is it. Uh, from it was about somewhere around here. Okay, the stop loss above, because the stop loss, why the stop loss was above this point, because that was the breaker in a sense, not the ICT breaker. That was break invalidation of the narrative. For example, if we are moving below this point, that is the reference point for the uptrend, the whole market's uptrend. You have watched the videos what I'm talking about. Okay, so this is the market level, right? So as we are moving below this point, I took a short stop above this point, because if the price is to stay and move above this point, I am looking for longs for a short. So if the price is below this point and I'm feeling that I'm going to miss the move because the whole trend is changing, so I will put my stop loss at this point for the opportunity cost. For the opportunity cost, why the opportunity cost? Because I think the market is going to go up. For example, as a base narrative, I think the market is going to go up. Okay, but the market is below this point. So what if it doesn't comes up? Okay, what if it doesn't comes up? So what I'm gonna do is risk these points, like 42 points, just in hope if hopes that I get stopped out. For example, if I'm hoping that I should get stopped out because I want the move to go up. This is a basically my hedge against my own trend. So I would be like, okay, if the price comes above, I'm definitely going long, right? Above this point, I'm definitely going long. But if the price doesn't comes up, when then one, so this becomes the invalidation of the whole trade. So the trades are generally based on the risk to reward ratio. It's not dependent on any risk is coming or not. For example, if I'm getting a good risk to reward ratio from a fair value gap while I'm having a good understanding of a trend, so I would know, okay, it's a good risk to reward ratio according to the trend. Even if I get stopped out, I will try it again from this point. I will try it again from this point until it invalidates my whole criteria. And the higher it goes against me. For example, if I'm getting some risk to reward ratio and I'm being conservative, I'm going to be very clear about this. If I were to take a shot, for example, if I were to take a shot, there are two scenarios for me. This all comes from having I'm going to be honest, this is coming from my whole system, but the way I'm operating or my thinking process is refined and might be helpful. So listen. Okay, so for example, if my invalidation is, there are two invalidations for a setup. If the price rejects from this point, I'm only risking about 18 points, and then I'll wait for the price to go above at this point. While in my head, I'm thinking about, okay, oh, the whole trend is going to change, and I'm gonna bet big if the price moves above this point, because if we move above this point, right, this point would be the bottom again for sure. So it's very complex. It's not that any trade is coming or not. It's tape reading while framing a good risk to reward ratio. So we were at the Q's, the QQQ, the QQQ, the early reversing 1 hour. So if you want to keep a record or a reference point for the NASDAQ, mark this level right now, which is a major problem, which has become a major problem for the uptrend. Whenever we are in a transitioning phase, I would revert back to being a fucking day trader, which I don't like really. So this is my reference point, and that is 428.80, 428.80, 80. You see how I'm building a whole narrative within the narrative. It's not if oh I fucking lost a trade, I won't get any trade. How will I get another trade? No, I'm constantly 24/7 reading the tip, and if it gives me a good risk to reward, regardless if it's going up, down, or sideways. So majority of the time in about for example in about 10 trades, I would be way hours above the risk I'm assuming. In the cycle of 10 trades, even if I'm getting paper cuts, right, I would be hugely surpass my risk when I'm right with the trend. So this level is really important. Even if you are in a downtrend, this is really important level. Should mark it. This is a reference point to the uptrend. Even it doesn't really matter even if we are below this point. If we regain this territory, you have seen what happened in the earlier stream. So this is a general narrative, but I am not allowed to go long. See how complex this gets. So as we are moving down and down and down to the oh my first time watching, how come you trade these not the not the bro, I'm not trading futures now. Till then I'm not trading futures. Maybe that's why. Is my stream lagging or something? I think my stream is fucking lagging. Ooh, 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 ooh. Is the stream laggy? I am not using the monthly contracts because I'm not trading futures, brother. Okay, got you. Stream's fine. Okay, so let's. Okay, I'm going to show you something very, very interesting. A very stress-free trading method is like you use if you understand these two and integrate these two in your perceptions, you will be. It's all starts. For example, if this is my invalidation criteria, my invalidation, you have your own invalidation criteria. You have learned a lot of these volume imbalance and all of these areas of interest which you. For example, if I were to take a trade, what I mean by risk to reward ratio, if I take a trade at this point, this is not a trade. For example, at this point, which a base would be of always be 1 to 1, never below 1 to 1. So the base case. So the base case, you see, I'm not moving my stop. I'm just moving my entry. Because I'm reading the market itself, I know okay, there gonna be spikes in between while it's going to move towards the downside. So I'm constantly looking at where the price extreme is, and where would I put my stop loss relative to my risk, which is at the base would be if I take a trade here, I would be able to take a trade if the price is willing to come to this point. Now I'm gonna ask myself, okay, is really the price is willing to come to this point? So see, this is subjective, na. For example, if the this is risk is assumed and this is objective, but where I'm targeting, the target is subjective because I've assumed such risk, so I'm assuming that it might go down at this point. No, 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 no. It doesn't work like that. So at any point, at the extremes, one should frame a good risk to reward in trade. No longs for now. And now we look at something interesting which is going to play the whole even if I'm gone, this would be interesting. The reference point on the cues. Excuse me. Okay, so the reference point on the cues would be 427.43. See this? What an amazing, what? Oh, wow. 427.40, 427.40, 40, and 428.61, 428.61. See, it's all symmetrical. 61, probably back to the previous day close in this opening range. So you see red, as long as we are staying below this point, not looking to go long. Obviously. And if we move up to this point, then nobody can. It's like it's cement, it's concrete, if you understand. If we somehow regain this territory, which is 428, and the on the US 100 equivalent to somewhere around here, which I've showed earlier, so that would be a really good. But as in we are in a transitioning phase, I'm day trading it short, which I really don't like, to be honest. I wanted it to go up to the fucking moon, you know. It's not. Any questions, brothers and sisters, fellow humans? Any questions? I would be happy to answer. Ooh, ooh, ooh. To the lower part of this opening range gap, an area of interest on the DXY. The DXY, how is it playing out? This, you see, this whole point. No question. Ray, man, how are you, brother? Okay, so I sometimes I really think I'm just saying words and nobody understand really what I'm talking about, or maybe I'm not clear, because in my mind it's everything is very clear. So I hope I cleared the narrative for everyone. Is the reference point, the areas of interest, it has come emerged as a natural consequence of, or a natural progression, because if okay, so it clears everything out as you have the right reference points and areas of interest. Okay, so this is the area of interest. What is more probable? Okay, I'm not going long as we are below this point, and if the price reaches to this point, you get the idea. That would be an extreme and an area of interest, but if it invalidates that point, then I'm long. So it's like I'm trying to figure out what's going to happen next, what's going to happen next, so it's usually you'll never see me you know what do you say, bragging about me calling out a move, because it's really not important for me. It's like what's gonna happen next, like next. So this is a general narrative. Good, love catching the streams. I'm sure I'm following it. Consume info. I appreciate it, man. So this is it. This is really quality education, brothers. I've worked my fucking ass off to come to this point. Talk like this. It's really, because how can I talk like this when I don't know how it works, really works or not? I, khair. Anyways, this is an area of interest. We might tag it, we may not tag it, but I'm not looking for long. So what can I do if it's really urgent? If it's really urgent, I can go short if with a good risk to reward. And I'll try to go short again and again with a good risk to reward until we are below this point. And probably what's gonna happen is what date is today? Watch again tonight anymore. Ray, you be specific with your questions. I'm very general. Even if you watch the stream again, you might not understand what I'm talking about. So the words I'm using might not really be helpful, or the language I'm speaking might not really be helpful, because as I'm speaking, these are just plain words for you, but they have a whole data behind my words in my mind. So if you want to learn something or ask about any specific thing, I'll give you the best answer for 100% sure. Better than anybody. Haha. Okay. So it removes the FOMO, right? It removes the FOMO when you have the right areas of interest. It removes the, for example, if I'm to trade this point, and like oh fuck, I know where it's going. Let's go short. Let's fucking go short. No, no, no. Where would you put your stop loss? Above this point somewhere. Fuck no. So this is how you like, even if you know where the price is going, doesn't really matter. Even if the price is ranging, doesn't really matter. Hey, Big G, bro, what's up? How are you, my bro? And they're closing a day or two below this point. But if we stay below this point, then we can expect some, you know, some fucking friction. Back to this, back to this point. Oh, 31 points. Wow, I was not even trying. 31 points up. Okay, so we will back to this point. Basically, at this point there's a gap. Okay. Please, if you do not understand how I operate, just don't think of it as a target or anything. I'm building a narrative from the start of the stream. If you join now, you can rewind. So if we continue down and give the closing below, 3 days are good enough. I am really talking about a downtrend. If you don't know the potential of this level, right? If we stay below this point for at least 2 days, I'm just being conservative, not 2 days. If I were to stream, I will update, but uh, for the stream, I'm saying just 2 days, give a closing below, then we can expect some further down, like a downtrend, wala down, medium term downtrend. Okay, as I'm talking, I think we are touching this point. Are we or are we not? Come to Papa. To see this lower portion. this lower portion is completely unfilled. It's like untouched. Generally, as I'm not interested in longs, this is what I'm expecting for the day, but I cannot go. What do you think about the monthly outlook on NQ? Uh, Monthly outlook, it's 20th is, yeah, it's 20th February. The month is, it's the last part of the month. Uh, if we stay below this point, Ray, if we stay below this point, then we can just you know, this would be our monthly range. Whole of this would be somewhere around here. We are a whole monthly range, or even might come below if we stay below this point. This is a high time frame reference point. Okay, so keep note on the Qs specifically. Okay, 428.80 if we, and even mark the date if you want to. So as I'm not shorting, as I streamed on maybe about 2 weeks ago about the dollar index. I told everyone that I'm not looking for. We were at that point 5. Okay, so when we were at this point, okay, you can go and watch the stream. At this point, I guess this was the point, right? When we moved above this point, yeah, this whole point was the area of interest earlier. This whole box. Yes, generally this whole box somewhere. Yeah. Got it. No 20x. Yeah. So, now it's hindsight, but at that point, how can I say it's for you to think about? Okay, how can I say? Even I have wasted enough years on fundamental analysis. You don't know. I've given it all. I wanted to learn this, and every possible strategy, every possible fundamental, everything I've learned, and it's very hard to disclude anything when you have learned it, right? So at the end of the day, you are clicking buttons. So what narrative can I take? What narrative or what model of the mental model of the market can I take, which is going to help me efficiently execute? Okay, so they are raising interest rates like right now. Like how can I know? Because the market is real time. So it all comes down to, for example, the whole thought process. I'm negating a lot of ideas, negating a lot of fundamental analysis, a lot of technical analysis, but just saying on the stream, for example, as long as, just making it easy, as long as we are above this box, I'm not looking for shorts, right? So you tell me, okay, was there good short opportunities or the buying opportunities? Okay, the whole, like, it's been a really long time. It's like 20 days or something. So yeah, 17 days earlier. So that becomes the NVOG becomes the area of interest you got at this point, even on the Euro USD. And even I said, okay, it's the 50% of the, I mentioned this point, and we touched that point. So you see, the NVOG becomes the area of interest. If I were to take a short, that would be high resistance liquidity run. Okay, and if I'm taking long, it would be a low resistance liquidity run. So everything works when you're aligned with the trend. So 17 days ago, Landshark Trades, bro, how are you? Okay, so 17 days ago, right? how can I say that this is going to happen while even stating we might not get an uptrend? I stated and it's something else earlier. Well, I cannot just go more and more specific because a lot of things which I assumed was has or have presented itself to me. Okay, so long, we move to the 50% of the monthly fair value gap. Then I remove this whole box. I was like, okay, maybe this seems like okay, Sal, you have given us a whole fucking box which contains the whole fucking market. So obviously, shrinked it down to this point. So wow, even 4 days ago, we were on probably on Sunday or Friday. Like if the price reaches to this point, this would become the area of interest. So here we are. So as long as we are above this point, we can wick below. We can, but this is the trend, a reference point and a trend and an area of interest. This is really important right now. You should take note of this, and you can get amazed afterwards when I'm gone that how the price reacts to this point. Yeah. So what can I do on NASDAQ? So a month before, as I was, you see this? Oh ho ho ho, ho ho ho. Noise. Okay. So as 46.4. So as a month before, what I did mention, okay, something is going to change. The dollar is fucking getting strong, which is the whole. I named the stream the gauge for a reason. The dollar is the whole gauge for the whole market, right? So I was like, okay, the Nasdaq is strong. The dollar will get strong. Will I short the Nasdaq instantly? Nope. Can I? Nope. When can I? When the market confirms me, because as I'm trading the Nasdaq is already complex enough for me to take another whole uh, criteria or moving parts into my analysis. That would be the dollar index, right? Okay, as the dollar is moving up, I should short the Nasdaq. No, it's in the back of my mind, right? Okay, dollar will get strong. If I mentioned it in that stream, I'm repeating this again and again. Okay, if the Nasdaq shows me some weakness, then I'll be willing to short. Got the tip from. Nice, a nice land shark. Oh, nice. So the Nasdaq is also transitioning, right? So this was like the last hope, the last line of defense. We may regain this territory. That would be good, but somehow screwed or fucked up. And that would be amazing because a lot of people would not understand okay, why the dollar is also strong and the Nasdaq is also strong. It's gonna fall. Sure, I should sell it. So those guys becomes the liquidity. Okay, generally, okay, if you just compare the Nasdaq to the dollar index, okay, it may be correlated, but over the years, over about 20 years, you would see they get unpegged with each other. Sometimes they would trend along with each other. Sometimes they have no relation even on a higher time frame. So it's like, do I really want the dollar? Dollar can be a confluence, right? But you are not trading the dollar, you are trading the Nasdaq. So if on a higher time frame, when they get in synced, so this is the backbone of the uptrend on the dollar index. When I'm talking about the uptrend, I'm talking about the 4 hours. Each candle closes in 4 hours. It takes a lot of time. So it's a higher time frame extreme. Okay. If I move to the 4 hours, look at it to this point, even drag it across. It's the dollar index. It's really, really rigid. So if we, okay, so if we, even we can move it to this 29th of February, it will still play out. So it's really a good reference point. You can chop around this point long enough. But if we move to this point, so as I'm using a good exact reference point, you will have a clear idea or clear narrative of what is shifting, when it's shifting, and when can I expect to stop something. For example, if the price moves to this point and stays below this point, then I'll wait for, like, because it's a higher time frame, so I'll wait for at least 3 days. 3 days, then I'll start to look for shorts. Then I'll be interested in the areas of interest below. But as long as we are at this point, this concrete point, I'm not interested in longs. Okay, so we have touched the opening range gap and we are bouncing off of that opening range gap. We can chop our way down to that point. Boom, boom. See, I'm not gonna explain it, yeah? Okay. Oh, oh, no. Yeah, this was the area, okay. See this 49, this was not a trade. I'm not in this trade, this was an example. But you see, even when I'm entering at this point, my stop has to be above this point. For me, for personally me, if you are trading the ICT, you can use the fair value gaps as you have the right direction. A fair value gap would invalidate or validate, but there are a lot of fair value gaps, right? So I have my own system to, like, fair, like, it's okay, I can put a good stop at this point. If the price moves to this point, my stop loss would still be at the same point. If you understand this box what I'm drawing right now and understand the risk to reward ratio, areas of interest, risk to reward ratio, and consideration of a general, for example, if I'm looking at this fair value gap, this fair value gap, this fair value gap, a lot of different confluences that would draw a box at that point. Okay, this box is huge. Okay, we have a lot of things between this box, so this box would hold be as a 74 points range. As long as we are still below this point, I'm not looking for. So you can use these things as that. You don't have to look at okay, this small fair value gap, if it gets invalidated, you can do that, but that would give you a lot of paper cuts, and that would make you lose your confidence. No, stops, when you know where to put your stop. One very interesting thing. Okay, so if the price for have you taken the note of this, all of these boxes? This is relevant for now. For now, it's relevant. This is relevant, and this is also relevant. So, okay. So, what if I think a price is not going to move at this point, above this point, but I'm really, really bearish? What can I do at that point? This is about lot sizing and averaging down into. Okay, so as I have my defined risk above this box and the price is at this point, right? Okay, and I know, okay, it's going to go down, and I don't know, okay, I just know time. I know time, for example, it's gonna go down for like 5 days. I don't have a target. Having target is, it's unproductive. It's really counterproductive. Okay, so for example, if I were to take a trade, okay, and I don't know where the target is, what can I do at that point? Like, okay, can I enter the whole position at this point? It's no, no. I cannot. It's really not good. So, but I'm really bearish. What can I do? But I think it might come back up, might not come back up, but I'm really bearish. What can I do? I would divide my position into fours or fives, depending on your lot size or your risk tolerance. Okay, so it's just the whole idea of dividing your whole position when you have your that right. So from this point to that point would, so this is an example. Please do not take this as a trade or anything. This is an example. I've explained a lot of things earlier if you just joined. So okay, so fourths of my position, single here, single here, single here, and the last where the stop loss is the closest would be the highest of the lot size, and each would, on the dollar amount, each would be the same. You get it? Get it? That thing. Or and what if it does, if I enter a position at that point and still I have 3 more bullets of the same position? I'm dividing my same exact position into fourths, for example, and I am really bearish. What can I do? If the price tags me in and continues down, I really don't give a shit. Okay, I'm still in a trade. Maybe I'm losing, maybe I'm making a little less money, but it's okay. Okay, so the dollar amount from here to here would be the same. Here to here would be the same. From here to here would be the same, but the standard deviation would be the smallest of the highest lot size. And relatively, it's like so on and so forth. So if you somehow understand this idea, it clears a lot of FOMOs. It clears a lot of things, but you have to be very comfortable with your invalidation. What is the invalidate? What is going to invalidate your criteria for you to do this? So even if the price is moving up, down, and sideways, I really don't bother or much. I like, okay, wherever it is, I'm gonna divide it into fourths. Tongue. If it moves to above this point, I'll wait and buy it. So this is all come down to natural progression. After years and years of doing stuff, everything comes to its equilibrium, and I think at this point I'm at equilibrium now. So because I don't really stress about trades anymore, I don't really stress about missing out on move, because I'm somehow in the move already. Even with a smaller lot size, I'm already in the move. So, but it's a good point of view. I've never seen anybody do this. And the most amazing thing about this point is when I'm entering at this point with the huge the highest of the lot size among, because the dollar amount is same for this point, the same point, this point, same for this point, and same for this point, right? So this is the highest amount. If this works out, which is with 60%, 70% of the time it do works out, right? It's going to give me an extremely fucking good risk to reward ratio. See, it's not adding to your losing position, right? Adding to your losing position was like would be like my invalidation criteria. If you are new, you would think it's adding to your losing position. It's not that. Adding to your losing position would be like, oh, it's gonna hit my stop, no, I'm gonna raise my stop. Oh no, it's gonna hit my stop, no, I'm gonna raise my. So that is what somehow you're adding to your position. In that sense, you're raising your stop. The other thing would be, okay, you're like, okay, it's coming back up, I'm raising my stop and adding to my position. No, I'm not messing up with my stop. I just, in some way, I know, okay, it's gonna go down and I wanna get an entry, but there's an opportunity cost. Okay, there's an opportunity cost. Is it going to take me or not? Because for example, if I'm thinking, oh, it has moved to 117 points, it's a lot of points. It might not go down a little more, and then it moves 300 points down. Like, oh fuck, oh fuck. Then this whole range would appear really small, and I'm like, oh, what the fuck were you thinking, man? So majority of the time I do this thing, and it somehow comes to the 50% my stop loss, where even if I get my stop hit, like no fucking care, I am still reading the tape. I'll wait for 2 days, buy it somewhere around here. So understand, it's a good concept. I hope you understand. What the fuck were you thinking? What do you mean, Big G? You do not understand, or what? Thanks for sharing that way. I work, I will not. Laugh. Just laughing at your comments. Which comment, Big G? Thanks for sharing that. The way I work will not be able to frame for the best entry. Therefore, I have been looking for a way to get into that direction. Yes, yes, exactly. See, you do, it's like you're still in the trade, even if it's a very small lot. It's a completely irrelevant lot, right? But you still are in the trade, right? You're getting an experience from that trade. You and but it all come down to, there are layers upon logic involved, right? Me not having a target, okay, for example, if I do have a target and I expect the market to move at this point, okay, at the, like, because what I am doing is completely subjective. The market is, you have to take a narrative of the market or a mental model of the market that is efficient, regardless of it is, if it's a lie, regardless of its anything, but if it's efficient and it gets the work done, right? So you want to take that perspective. People want to get to the close, people want to get close to the truth, okay, how the market works. So they will look for fundamentals, if somehow there's something involved or somehow which is missing from them. Something is, they work hard, or maybe they just go through a lot of articles and everything, move through all of these datas, so they would somehow be able to predict them. No, it's all about risk to reward ratio. So it's all about risk to reward ratio. So for example, if the market is blind, completely blind, and I'm trading it, so I know, okay, somehow there is a support, and I know, okay, market is gonna come down to this point, but that is the only position I know. Okay, like, so you see how FOMO comes. If FOMO comes from scarcity, right? Okay, this is it's fucking hard for me to find a trade, right? So this was the trade I found, and I really think the market is going to this point, right? And I'm jumping, and this is FOMO. If you somehow learn to read the tape, you'll not have FOMO. If the FOMO really doesn't exist, FOMO comes from a point of view. I do understand that point of view. If you meet the market at a certain point of view, you'll have fear, you'll have FOMO. Because you are meeting it at that place, na? You're coming from a place which will obviously logically because the market, like, okay, you have a trade right now. When do you think the next trade will be? I don't know. For example, I don't know. So why are you not taking this trade? Because I'm afraid. So see, if you know, okay, where the market is coming, or where it's gonna go at some point, you won't have FOMO. See how this goes. So reading tape is the best thing ever. Okay, so. Okay, so I was like, you have a target, hey, the market is coming, it's just 50 points, but this is the only part you have figured out. For example, so obviously you're gonna have FOMO, and you'll try to jump in at this point, or that point, or that point, just to get to this target. When you think in terms of target, you're thinking in terms of relativity, and your mind skips a lot of things. It's gonna take a quantum jump. It's gonna think, okay, I don't know what's gonna happen, but it's gonna come to this point anyways. See, I'm thinking in terms of this point. For example, I have a target in my mind, so my mind is completely absorbed in this location, and I think a market is gonna come to this point. For example, so it's gonna take a jump. It's not gonna think logically. It's gonna think, okay, it's gonna come here at some point. I don't know when, but it's gonna come there. While I'm focused on this point, maybe it's a transitioning phase. Maybe I missed the whole fucking transitioning phase. So having no targets is the ideal state of mind you can have. Having no targets, no expectations, no guessing, no targets. Clear? For anybody who joins the stream, you may think, okay, this is a trade. Okay, we. Oh. What is going on? Okay. So you see this point. You see this point. We are touching this opening range gap. As I start the stream, we were like somewhere around at this point. I was not allowed to see how the rules really sometimes things happen. For example, if having ideal position, I'm gonna if you somehow integrate this, having information and integration of information is completely different thing. For you to be a trader, you do not need to collect as much information. You need to integrate that information for you to execute. So execution only comes from integration. So as I have my rules in place, majority, or you can say 40% of the time, I do not wanna have an idea. Personally do not wanna have an idea of where the market will go. Why? Okay. For example, if I'm thinking of this box, if you somehow grasp this concept, you would understand where I'm coming from, right? So this is completely logical and rational. So if I'm looking at this point, okay, this level is was looking at, okay, the market is gonna reach this point as my target or take profit point. Majority of ICTs have this problem. They do not have an idea when the liquidity is taken or the price is out of range. They're clueless. Okay, okay, now what? The market has reached to this point, so what can I do? Can I go short? No. If you are looking to go short, so why did you take profit? It's rational. It's layered of logic, like, right? It's like, okay, so it was coming to this point, that was the area of interest. Why did you take profit if you wanted to go short again? Doesn't make sense, right? So you never think in terms of, I'm gonna if you understand, never think in terms of target. I really never think in terms of, I usually do have an idea where the price is going, but majority of the time the validation or the invalidation really fucking helps. Like, it's this is how I make money. Like, really, having targets is how it's majority of the people think in terms of targets. You don't want to do that. I don't know how to explain it to you if you do not have a clue, but if you just don't think in terms of targets, you'll realize that a lot of things, okay, how the mind processes things, and it will be more easier for you to be in a line with the trend if you don't think in terms of target for some reason. Okay. So as we were at that point, right? Okay, And I was looking at that point. I mentioned this earlier at the stream. But how did I portray it to you as I portrayed it to myself? Okay, the price is below this point. I am not allowed to go long. So what can I do? Okay, so as I'm negating the information above me because I'm not allowed to go long until this point, what can I look for? I'll look for areas of interest towards the downside. Area of, why do I say this, the opening range gap an area of interest? Because it's an interesting area. This doesn't imply any action as we are coming down. If you understand, what I am saying is really a naturally progressed way to look at things. Because if you, it's like there was a quote about not 10,000 hours for to be you to be to have a mastery over anything. You need 10,000 iterations. So when you do 10,000 more than probably 10,000 iterations, it comes to the natural equilibrium point of operation. So as I'm allowed to go long, I would be looking for areas of interest which interest me, and the tools I use are more often than not used by everyone, which is the opening range gaps, the end walks, the there's another thing which is the previous month's close. Nothing more special. So we are reacting off of that point, and it's 10 30 10:30. It's lunch hour, right? You can chop around this point. Like usually, what happens? I'm not saying take a trade at this point because the risk to reward is skewed. You get there's only 2 or 3 entries into a trend. After that, it's fucked up. So like it's in time distort time, like it's slowly move. Some like this is generally, but I'm not looking to go long. Uh-huh. Got it. Got it. Anybody has any other questions? I don't stream every day, so it's your time. You can ask me. Oh. To the. I move point. Oh, that we use curve ball. The people who are watching me, uh, I don't know if you're gonna believe me or not, but I really don't. I don't want you to believe me or anything, but you don't need a book map. I know the core of the market, and please don't think of me as a brag. It's not brag or anything. At this point, I've made about 70 streams, so I really know what I'm talking about. Book maps really don't matter. They really don't matter. No, nothing to do with the market. It has everything to do with the ATR or shorter time frame. This width, look at this width, right? The channels, the width, but every trend has its own width, right? Or a channel. Curveball, because a lot of things are very, very, very obvious and very obvious and very normal. People are really making a shit ton of money with the knowledge. Like in a sense, from my point of view, please, hey man, just don't think I'm bragging or I'm egotistical person or anything. Just understand what I'm doing. When I'm watching, I've watched a lot of podcasts of these streamers. A lot of, I swear they don't have a clue. I know, uh, when you know someone is really do not have a clue, and they're talking with such confidence and they're selling it to you, it really it's a punch on my gut care. Okay, should I do this? You understand, right? Okay, I wanted to be a trader, right? At the very start of my journey, I was like, okay, these motherfuckers want to make money on YouTube and everything, but I would be a trader. I don't care. I really, I'm personally, I think I'm not good at communicating. I don't like talking, right? So I was like, okay, I'm not. I have a brain which I think is really useful. So I like, I'm not gonna make it to waste, and I'm not gonna work for anybody. So I learned trading, right? So what happened? Now see people really talking about trading. A lot of podcasts. I'm not gonna mention names, but majority of the podcasts you watch, I have watched, those people really do not have an idea, really do not have an idea. So those people, even on the top step TV, right, they're using all of these uh, things. uh, Once you see with your own eyes how the market works, and you back tested more than 100 years, right? Okay, more as long as the market existed, for example, in the 1930s, 1950s, or as long as the Dow existed or the NASDAQ existed, and you see things working out in some way. What do you consider better for volume imbalance? You're the first person. Tails, volume imbalances, or what do you consider for entries? Niels, I asked you another question. How do you consider a trend? Large land chart trades bad or to work for me. I'll finish the video tonight. Much. Goodbye, my friend. Goodbye. Have a good day. Okay. Considering entries and volume imbalance. So I was asking you, how are you considering your trend? That question should be a priority. That question should be a priority. How am I figuring out the trend? Once you have your trends right, uh, if you want to ask me, I can show you some things, but it's it's everywhere. Okay, so how the trends work, right? Then you want to ask me, how would I enter uh, in a trend with a good risk to reward ratio? So if with a good risk to reward ratio, uh, it's the next question. First, I ask you, okay, how do you work with a trend? Having if you understand how the market works, and if you stay here for at least 3 or 4 years, you'll realize it's the whole P&L is a chop. Majority of the people who make money will lose money. I know it for a fact, because I am operating at a very, very extremely efficient scale, but it still somehow chops me up somehow, being honest with you. Okay, so I know the people who don't know anything are making money off of you. mm. I really know. I would not say this if I don't know. So it's like, how are you determining your trend? If you have your trend right, then you can go on it on a back testing thing. I'm using this fair value gaps. Tails, the fair value gaps, the volume imbalances are the areas of interest. As I was framing a risk to reward, I was like, okay, I'm not allowed to go long. What can I do? I'm allowed to go short. Okay, so now I do have a direction. Okay, I do have a direction. Curveball, exactly. You may think risk management is everything, is overrated and everybody talks about, but you don't understand risk management, and you don't understand the risk to reward ratio. And if you think you understand, you are closing your mind to it, and you will never understand everything, or every trend, every range, every trade basically comes down to the risk to reward ratio. Everything. It's not probability. Even the probability, when the trades of the 23% probability trades would pan out to be a like 1 to 6 risk to reward ratio. Why the probability was low? You would find out, okay, oh, it was an irrational point. It was a really irrational point and an extreme point. So at that point, I was considering that the probability was low, but now, no, the probability was high according to the market, but it was an extreme. I perceived it as a low probability because I was afraid. So as it panned out, it gave me a good risk to reward ratio. So these are the terms which are loosely used and nobody really understands. Every trade is a risk to reward. Every trade is a risk to reward. The price was at this point when I started the stream. This was like, you see, I know you might say, "Oh, it's fucking hindsight." Like, no, please don't think of me like that guy. Okay, so it was like at this point, right? So I didn't took it, but the risk reward was good, but I didn't knew the target. I have an idea. I had an idea because I was not allowed to go long. So I was looking for the areas of interest below. Okay, so the as I was looking for the areas of interest below for me to take partials or to do some activity, so I have my trend figured out. Okay, okay, I'm not allowed to do certain things, but I want to engage in the market. So what can I do? I can look for a short. Where can I look for a short, right? If the things I'm repeating again and again, if you just take these things and ignore all of these things, you're layered upon logic. What can I do? I can go short. Okay, so I would try to go for this is ICD terms. This is ICD terms, and not my strategy. Okay, so I would like this point. Fair value gaps, right? You're asking about fair value gaps. Now you have your direction right. Now ICD with say okay, look how the fair value gaps are acting, how precise they get, and everything. But it's like you have your direction right now. Every fair value gap will work out. If you have a confusion about the fair value gaps, you are moving up and up but up a time frame. So you're looking at the fair value gaps in a statistical approach. For example, if you watch this fair value gap and this fair value gap, okay, if I move to the 5 minutes time frame, see this fair value gap, this fair value gap, this fair value gap. So direction is key. The trend is key. Okay, so you have this fair value gap. The other one would be at now the problem is okay, where your criteria would get invalidated. If you're just using an area of interest for the narrative, oh no, it's gonna get some messy. It's gonna make you indecisive. It's gonna fuck you up. Then it's gonna go into your direction. So just figure out how the trend works. What are you using for the trends, Thale? I'm gonna just say whatever it is. Just tell me and I'll say okay, it's gonna work or not. I can if you guys are using any strategies, I can just give you a probability ratio for these strategies because the core is the same. Okay, so you see this both fair value gaps, right? If I move to the 15 minutes time frame, there is no fair value gap. Now if we move to the 1 hour time frame, is no fair value gap. The fair value gap was up and above this point. So at any point, you can say कि fair value gaps work. Like really? Yeah, they do work. But which one? I know, okay, they are very precise. I'm not dissing it or any sense, but it's like when you have your direction right, these are the areas of interest. The tools you are using, you should always know your sword or know your gun, how it works. It's just having a good gun doesn't make you a good soldier, you know. So these are areas of interest, nothing more than that. Okay, 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 okay. Buddy, tails. I'm asking you something. What are you using for the trends? Are you using anything for the trends, or you are just thinking in terms of areas of interest to frame a good risk to reward and hoping? Because if you even if you do it for a very long time, it's not gonna work. If something works, it's gonna work for like from the day one. What direction is the market moving? Yeah, on the basis on a very basic scale, the direction works in a slope. Whatever thing has a slope over a period of time is the trend. This is the very blueprint or the skeleton of the trends. Uh, s- this is a slope. Very fucking obvious, right? This is a slope. If a general slope, if you ignore everything, you see a slope. You never challenge the slope. Never. So on a very, very, very basic scale, if you're using a single x and y chart, the slope is the trend. But once you get precise, now you're looking at the fair value gaps, the volume imbalance, the higher time frame along with the lower time frame. So generally, a slope is a trend. What do I mean by slope? I'm going to show you on a very basic level. On a very, very basic level, please do not think I determine my trend. This is gonna be a complete lie. I'm not determining my trend according to this point. I'm explaining the bare bones of the trend, how the trend works, right? So now it's apparent it's a slope. For example, on a 5 minutes, each market has its own trend. When I was talking about the NQ earlier, I told each market is already complex in it of itself. Why would I add another layer of complexity by adding the dollar index? Now I have to exactly time the dollar index on top of the NASDAQ index. Okay, NASDAQ index, then if the trade wasn't didn't worked out, I have some phrases like oh, it's a good trade, it was a good trade but a bad outcome. No, the mental model you're using, you're not it's not quite good. It's just hides your mistake. Okay, so what I was saying, okay, I was saying the slope, right? So this is a slope, a general slope, okay? And fib channel nahi, it's just a single channel. Okay, so this is a slope, okay, and these areas is a general market width, general market width, okay. So whenever you are using anything like what do you say, liquidity or these areas which you say book maps and everything, it's working within this point. That is the width of the market. So as the market is moving down, its job is like it to deceive you, and while achieving an objective to reach some point. So this is the whole general width of the market. But it came down. As it was at this point, it was already decided it's gonna come to this point. But it did all this bullshit, right? I know there was a holiday and everything, but it's a machine. It's a blind machine. It's connected. You don't wanna break it down or chop it down into pieces just for your perception to understand, because that's how our minds navigate within the world. Okay, who I am, where do I live, box within a box within a box, a city within a house, within a colony, or within any specific area. Then who I am, then so it's folders within our minds, like, so we want to dissect for to digest, right? We are dissecting information into bits and pieces for us to understand. So our mind's basic strategy would be to understand the market. It would break it into, chop it into pieces. But no, it's all connected. Even there was this holiday, it was all intact. It's like the market doesn't forget. It's a blind machine who's working day in and day out. So okay, so this is the general market weight, right? The general market with how can you determine the trend? Some people will choose, okay, this is the break of the structure, we close above, we moved above the low, the high, low. This is the best chart to have, in a sense, if you are understanding the trends, basic understanding would be to pick up this idea of higher highs and higher lows, but uh, be very conservative, or you can say, okay, don't take it literally. It's gonna fake you out, right? Don't take it literally, okay? So give a closing below, we move up, we move down. This is not a framing a good. This is how so. Okay, what do I mean by the general market width, right? Each time frame has its own width. Okay, so as I'm operating within the 15 minutes time frame, this is a general market width. This from this point to that point. Is anybody having a clear understanding what I'm talking about? Okay, so this is a general market width, like it moved up, moved down. What am I using, and why do I use this? This is a regression channel, right? From this point to that point, it divides two standard deviation upside, two standard deviation downside. So I can adjust it. This is not what I use. So to uh, this is not what I use for my analysis. I'm trying to explain the bare bones of the market and what do I mean by the general market width, which I usually say as the ATR. So this all of that would be the ATR or liquidity move. Then we move up to this real point. Mm-hmm. One days, okay. Uh, what the hell? Yeah. So for the tales I was explaining, I found have 15 minutes if you have a good big G. 15 minutes is really good. On NASDAQ, it's when I was testing ICT or back testing ICT, a lot of things I saw, okay, was like, fuck, how am I even allowed to know this? ICT can get extremely precise. Sometimes it gets really extremely precise. The chemical X, as you would say, the chemical X is missing, which the basis of your take profit is the problem, which ICT would say, okay, he has its own problem. Okay. Liquidity is not a good target, to be honest. Liquidity runs you can understand. okay, there are liquidity runs, no doubt about it, but you don't want to have it into your mental model. You want to be aware of it, but not to be uh, so aware of it that you are acting upon it. You don't want to act. For example, if the trend was up, this is hindsight, right? This channel is drawn in hindsight. So at hindsight, look, I know, okay, this is a standard deviation, but at this point, at this point, uh, maybe I streamed, maybe I did stream. Okay, okay, we are gonna move back up and up and up, and we're gonna move a lot of up. So we did. So I knew, okay, at this point, okay, we are gonna move at that up. Probably we were like, okay, so we're gonna move up, right? So every move down would become the liquidity run. See, I know, okay, it's the if it's moving against my direction, it's the liquidity run. So you can see this a lot of the times. This thing, you know, a lot of people want to look at a single static thing, and they want to think their strategy is should be very rigid. Change your perception. You don't think in terms of rigidity. Okay, so you'll see a lot of these things. This thing, this thing, but it made a high relative to that and moved up. So this is what a liquidity run is, right? But you don't wanna base your bread and butter on this thing. You wanna work on the extremely important thing, which is the direction. When you have your direction right, for example, so if the market came to this point, okay, okay, from this example, I'm going to explain you a lot of things, okay, and what are strategies and how the strategies are different from one another. Okay, so the market wants to try to move up to this point, right? So some people are like looking at it from this point, which I usually do. Okay, it's gonna break out on the 15 minutes, like a big move. What is the problem with the breakout? It probably might not give me a good risk to reward ratio. Okay, I do know the breakout strategy. It is playing out. For example, if I get an entry at this point, and it broke out, like, okay, good, I'm in this position. But if I entered at this point, my stop loss would be at the same point which I explained earlier. Okay, I might not give a good risk to reward ratio. So and the other guys would be the breakout people who are looking for this to break out of the structure, who are bulls. Okay, we are not even talking about bears. They got really fucked, so they are dead. So this is the point, right? See how the market is entertaining everybody. So we move up to this point. Those are people who bought at this point, stop loss at this point, like high leverage people. So once you are entered, the only option you have is to place your stop loss and just wait. You back test, you'll have an idea okay, how long the trends do last and what can I expect. So you can ride this trend. But okay, so any move to the opposite to my direction would be a liquidity run. Look at this. Yeah, I've showed you this example earlier, right? There we go. So you are trading this. Majority of the people who do not understand ICT or they started from the ICT, they're trading this point. What are you doing, bro? You're just trading the ATR. Come on, you're not trading. I really, there is no such thing as I somehow mentioned some earlier. Okay, there are macros and everything. Have you ever heard me say, okay, oh, it's 9:30, it's a buy. It's 8:30, it's a buy. No, it's like, oh, it's 8:30, it's gonna it's fuckery is gonna happen. I'm expecting something, but I'm not doing anything at that point. Like, okay, I can expect what is normal. That is all. I'm not using any macro. I'm not using any silver bullet. Whenever I'm using the silver bullet, whenever you're trading the liquidity, you're trying to be out, you're trying to be smart as, which market doesn't forgive. You're trying to go against the trend majority of the time. So be aware of this point. Whenever you are trading, like the main point is the targets, which comes from a base logic of liquidity runs. Okay? The market only moves from point A to point B. Either it's to complete an inefficiency. That is the base of the philosophy, right? That is the base of the core of the philosophy, which based on a slight change would, you know, a slight change would spark some neurons. Uh, so what I was saying, I lost the train of thought. Mm-hmm. Mm-hmm. Oh, okay. The basis of your philosophy is either the market moves up or down to complete an inefficiency or to take out liquidity. Okay, so this I'm being mm, not rigid, just very rough idea. For example, this is how the market started, and this base operation was to uh, fill out its imbalance. This was the first candle, so it moved up and created an imbalance. Okay, so it created an imbalance, so people shorted it. It was like, okay, so it's liquidity moved up. So yeah, okay, so there is a liquidity, people who bought it, so it becomes a range, right? Generally speaking, does it or does it not? If you take this as a base narrative, if you think of as a base narrative, you're generally taking you're trying to trade a range, isn't it? Or is it not? Okay, so no, you wanna look at the slope, where the slope is, if the price is negating that information. Acha, very interesting thing is, yeah, as I have my direction right, every liquidity runs would enter me into my position. See, now you are cognizant of the liquidity. As I am entering at some, as I am entering into the trend, I can be like, okay, this is the low, my stop loss if I were to very extremely bullish, because the only thing hidden, I've come somehow to some extent somehow, which I think I've at this point I do not want to learn anything new, because it's gonna distract me more. Not because there are something which are lacking or I still don't know. A lot of things which are needed to know, I do know. So it's what I was saying. It's going to give me a good risk to reward ratio, as I have my direction right. This liquidity run, as it ran down to this point, stop loss certain point, this point, okay, I'm gonna try it again at this point. I'm not looking for shorts. It's not that easy, obviously. Everything needs confirmation. I'm watching it into 15 minutes time frame, then you have to watch it into 1 minute time frame, then it's a lot of work, man. As I'm talking, I can explain what I do. It's a lot of work. So it's a bare bones on the very basic level. You need to understand how the trends work, brother. What do you say? Direction is more. Yeah, direction is everything, brother. Direction is everything. Don't try to outsmart the market by taking other people's stop losses. That's not how it works. When the market moves up or down, it obviously it's gonna take some highs. Obviously, it's gonna take a. Well, how can it not move up? You see, now look at this, okay? It moved up. Like, you can say this was a liquidity run, or you can say this was a liquidity run. But no, when you are looking at this, you are trading this point, and you'll complain, okay, I don't have a good target. Like, okay, you're trading from that was the point. The market revert back to trade hit to that point. Like, okay, not that impressive. Like, again, somehow this was the liquidity and it moved back to this point. What are you doing, bro? Like, you, like, look what happened. Like you see, so it's like you get my job after all these years has come down to not finding it, finding a good entry. That's all. I don't know when to take profit. Even if I do, I ignore it. Majority of the time, it moves into my favor. This is an equilibrium point. My job is to get an extremely good entry and sit on my hands. That's all. So everything will be easy and stress free when you stop trying to, you know, take other people's stop losses. You're not even doing that, nor is it happening. uh so it's like you see, up now it took out the high, it moved back down. So see, like, what are you doing? You're trading against the trend. You're taking this liquidity. Oh, I've taken out the liquidity, and I'll take out this, I'll be out at this fair value gap. Like, just buy it at this point. Like, you should have, like, okay, I'm gonna move out at 300 points, 400 points. I'm saying a lot of things very new. I don't know if you guys understand it or not. But anybody who is trying to tell you, okay, oh, this strategy, this is a fixed strategy, and I'll also tell you, okay, why does it really appeals to you? The fixed strategy. Our minds are really attracted to the symmetry because it gives us a full coherent logic to work with, regardless of it's connected with the reality of not. We wanna rely on somebody because being mistrustful is not, it gives us pain, so we want to run away from that thing and hang on to something which gives us a sense of security. So we want to have a good framework built by somebody who's probably trying to sell you something. So okay. So see this point. Yeah, like, okay, it's gonna move. It's gonna chop, 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 slowly, 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 slowly. It's 10, 7, 11, 17. I'm gonna give you some coordinates, then I'm gonna go. Anybody has any other questions, you can ask me. So this is a static point, right? This is a static point in a higher time frame extreme. I want personally hope. It's a hope. Okay, if we move up and above this point, we would likely be continuing our uptrend. I do not like, I do not want the price to move out of price discovery mode, because in the price discovery mode, it's easy, really, you know, easy. Why it's easy? Because it's somehow, whenever the price is moving to like this now, so it was initially like, uh, oh no, doesn't look right. Okay, so it was like a coiled up snake. It freed itself from and moved into the price discovery mode. Now we are, ugh. If we move to this shit again, you can expect some choppy things. I do not want the price to move into the downtrend, and it's showing some weakness. And regardless of what I like or don't like, I would still trade it if it gives me a good opportunity. Okay, so the coordinates would be, so this is the static point. Ooh, 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 ooh. So the coordinates would be 426. 426. I know there are a lot of boxes, but only one thing is allowed to be done. These are areas of interest for tails, buddy. Do you understand about the trend or not? Or did I just complicate things for you? If I did complicate, I'll explain it. No worries, just ask. 425.94. 425.94, 427.21, 427.21, 21. Understood, right? So, basis of the slope, and I'm gonna give you some cherry on top. The higher the time frame, the static the slope doesn't really change. The market can fool you with this small candles as you're zoomed in, and it's gonna, if I you see, if you understand that we become what we pay attention to for a longer period of time. Our minds adjust our perception to the thing we pay attention to, right? Because it's somehow perceive it as important. So it's gonna, if I'm looking at each candles, it's like being building, and it's like it's like it 10 points, 5 points, 10 points, 5 points, 10 points. So it's gonna adjust my perception to this point, and I'll be looking at these fair. No, 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 no. Zoom out, or look at the 5 minutes. The easiest way, the 5 minutes. Just look at the chart from this point of view, zoomed out. If you take this approach, a lot of things will pop out very clear. You would know, okay, you do not want to trust the candles, you want to trust the this formations, different formations. You're not looking at specifics. Okay, you're not looking at specifics. If I go back and back and back and back, you'll see a lot of opening range gaps. These are things, but they'll play out perfectly. Like everything you see on my chart was an extreme or is an extreme at some point. Nothing is like irrelevant. Like, see, as I go back, I'll like, see this. Power up your plan. The hell. Oh, okay. So this is the area of interest. Then I'm gonna go to 425.87. 425.87 to 427. Gotta go. Big G. Okay, man. 427.21, 427.21. Yeah, basically this whole point. Little bit above this point. So if we fight up and above, move up, give a closing, this would become the bottom. This really, I am talking in days, in 2 or 3 days. This probably, and I hope if we do, then we'll move up. Otherwise, if we give a closing below this point, this is going to make or break the trend, which is highly unlikely. Once we regain this territory, we are really good to go. Still, I'm not allowed to go long. First, it needs to move up and above this box. And meanwhile, I have this area of interest. Okay. Thank you, guys. Thank you for your time. Hope this is enough. And I did clear the narrative. We haven't did what? There is a thing. Something. Ooh, what is that? Okay, this is going to be interesting. We haven't delivered to the upside. Can be. So as I'm moving smaller and smaller and smaller and smaller time frames, the areas of interest or the ideas becomes relevant. I do not use this as a main source, but as the price is here, this is becoming relevant. So all of these things are in the back of my mind. As the price moves to this point, it becomes relevant. Okay guys, thank you. Just mark this area, and we will look at the dollar index just, and then sweet. Okay, uh this was given 4 days ago, and the price is here. It still doesn't mean it's not gonna come back to this point. This is an area of interest for a higher time frame. Okay guys, thank you so much. Mm-hmm.